All right, welcome everyone. This is Bob Maury. It is Tuesday, the 26th of August, around about 1 o'clock my time. I have not done an update in a while as I have been unavailable to really get these posted. Plus, markets have been rather uh, volatile over the last few weeks. There's been some big moves, as we all know, and some are one-sided, like the live cattle futures. Some are two-sided, like the soybeans, which popped up pretty good by 60, 70 cents or so over the last couple weeks. So anyway, based on my availability and then also just kind of looking at the markets and trying to figure out what's next, hasn't been so easy with some of these seasonal tendencies. So I just kind of took a little break there, and now we are back in action. So let's get to it. I need to wrap up a strategy that we had hanging out there that was stopped out, unfortunately. So we'll look at that one, bring everybody up to speed on that, and then I'll introduce one new strategy that has set up for this week. And it looks like there'll be a few more probably beginning of next week or so. So I'll get those published and get those in front of you. So let's get to it here. Dialing over to the portal. And dialing in here, you'll see the most current PDF version. Uploaded a bit earlier for this week of 8/24. And here we have it. So we have the bearish Jan crude, which was stopped out. We'll take a look at that one. Took a loss of about 530 for the more conservative entry level, and about $1,300 or so for the more aggressive entry level there. Looking at the new one on the bottom here, 366, we've got a bear spread in soy meal futures. So it's the December versus January contract. And we'll go over the data once we look at the chart there. So let's dial into the charts. So first of all, that crude, just to finish the thoughts. So we were looking to get short, and the market accommodated right out of the gate. But then it overly accommodated as the market pushed through our stop level by just a touch. The high was 238, our stop was at 230, so 8 points through us. And on this little spike right here, and then it did what it was supposed to do, which is found weakness throughout the seasonal window. And we have been trading under the benchmark for at least a couple weeks right now. So hindsight's 2020. Obviously, I wish that we had our stop a little bit higher, but it is what it is. We need to set the risk and define the risk, or the market's going to do it for us. And usually the market is less kind than you would be when it comes to the risk management. So I am going to basically declare this one a loser, because it is. And we will look to fight another day in this WTI light sweet crude market. So that is the crude spread. And then we've got the new one I want to introduce here, which is the bearish soy meal. So let's go over the information in white right here. Strategy number 366, bear spread in soy meal. Long the January 26 contract, short the December 25. Margin requirement just shy of $300. Risk reward for entry level 2, more conservative, risking $80 to make 150 or 180. And then for the more aggressive average in traders, risking $200 per two lot that you average into to either make 260 or 320 if all you do is get level 1, and then it breaks down to that first target to be a $120 gain. It's not bad risk reward profile, pretty conservative here, definitely for the more conservative entry level. Looking at the setup, this market has been quiet for quite some time. So this thing has just kind of drifted lower, all right? So it's definitely been in a downtrend. Had a pretty snappy correction here all the way up to this white line, which is the 200-day moving average. Fell back a little bit. So the seasonal window, August 22 through September 10th, so fairly tight window of opportunity there. And looking to get short. And the levels would be negative 25 and negative 22. We've already been through those, I see. So we'll need this thing to revisit up here and then break on down. Targets are negative 37 and negative 40. So we're basically going with the direction of the trend. And the seasonal window is bearish, so that kind of lines up well. and we're looking to get in at these -25 and -22. Stop is up here at -14, which is north of this white line, which is the 200-day moving average, and that's exactly where this thing topped off yesterday when it had that rally high there. All right, so that is strategy number 366, the bear spread in soy meal, December versus the January. All right, so everybody should be on the same page. We know the entries and we know the exits, so we'll see how that one plays out. And again, I will be working through some more strategies through this week, and again, probably over the weekend. We do have a holiday this week, or this coming week, that is, with Labor Day. So Monday will be a day off, at least with the ag markets. Not all the markets, but with the ag markets. So for those who are just ag traders, you'll have a nice long weekend to enjoy. All right. So I'm going to leave it there, and I'll be back in touch. And thanks so much for watching.